How do banks work? Well, if it takes money to make money, well, that's not the same thing for the bank, right? It only takes your money for them to make money. Yeah, well, you're told to scrimp and save and sacrifice, delay and defer your life away, well, you can hopefully amass a nest egg for way, way out in the future. Oh, and by the way, they also tell you got to take high risk, high return, or that compound interest over 30 years is going to be a miracle for you. The banks are doing something radically and totally different. So if you want to keep feeding the biggest building institutions in the world at your expense, keep putting money into regular savings accounts and CDs and pay interest to the bank with your loans. I remember when I was going to buy a vehicle. I'd never bought a vehicle before. And they were telling me, you can get 0% financing or $2,500 cash back. Look, in my early 20-something-year-old mind, I was like, oh, 0% financing, that sounds great. But what's really happening is, if they're not going to give me $2,500 cash back because I finance with them, I've now paid my interest charge up front. I just forfeited $2,500, so that's not really 0%, is it? If I gave up $2,500, it means I paid that interest charge up front. Think about how tricky that is. You get this or that, and 0%, no, not 0%, $2,500 financing charge for that 0% loan. So that's one example of what the banks do. But what does this mean to you, and how can you think more like a bank? Well, let's just break this down into a few bullet points. Number one, banks are in the game of other people's money. When they tell you it takes money to make money, they're using your money to make money on your money. Number two, they're in the game of cash flow. They're not waiting 30 years, putting their money in a retirement plan, hoping it's going to pay off someday. They're in the game of risk management. They don't believe in high risk equals high return. They want collateral. They want down payments. They want good credit scores. They want money sitting in a bank account that they know if you get in a hardship, you can still make payments to them. That is the game of risk management. But you know what they're really in the game of? Arbitrage. They rent your money for, I don't know, a few cents, and then they turn around and charge that for double, right? Like maybe they pay you $1 of interest, but they turn around and earn $2 by paying you that $1 of interest by charging someone else. All they really are is an intermediary. Look, the easiest example when it comes to arbitrage is they're renting your money. Go look. I urge you, go into an institution in the next month and just look all over. They have billboards, they have screens. They're going to show you what they're willing to pay you for a deposit. That deposit, they might say in a savings account, it's going to be less than a money market, which is less than a CD, which is less than a long-term CD. You know, there's all these different interest rates that they're offering based upon how long you're going to lock your money up for. But then just look around and say, how much are they charging you? How much are they charging you to utilize that money? And you're going to find it's a drastic difference. They might be paying you at most 1 or 2% and turning around and charging 5 or 6%. They're giving you $1 for parking your money there, and they're turning around and renting that out to someone else for $2. That's 100% markup. That's arbitrage, and you will see it advertised as if it's a good thing as you go throughout the institution. Look, all they really are is an intermediary. They provide a service, not a product, and they make a profit. Maybe early on banks thought about making a product, but then they realized there's way more margin in money. Money can be on a computer screen. You don't even have to have a safe for it anymore. And as a matter of fact, try to go take a big withdrawal. If you've got money in a bank greater than $9,000, go ask for $10,000. See if they give it to you. I've been in credit unions that won't give more than $3,000 of actual cash because A, they don't have that much money on hand, and B, they don't want you to be withdrawing money. They want you to think of this as a computer game, as like something that's just on a computer screen, not actually cash that's in your pocket. Look, almost everyone uses money, but not everyone in the world uses the same product. So we all use money. You know, some people like Apple computers, some people like Dell computers, some people like, you know, other forms of PCs. Well, yeah. Not even everyone has a computer, but almost everyone has money. And even those people that have computers don't all have the same computer. So think about the opportunity that there's that much money out there. And they're saying, hey, why don't you store your money with us? We'll be really good stewards of that money, but then we're going to go ahead and give that out to other people for a much higher rate because of that service. So what are the solutions here? Number one, think like a bank by asking the question, how can you leverage with high certainty and great risk management? It comes down to your investor DNA. But they're leveraging with high certainty because you make a deposit, then they're asking for collateral, they're asking for taxes, they're asking for, if you don't have enough money with them, private mortgage insurance if you don't make enough down payment. They're doing all these factors to mitigate risk, but they're using your money to make money. That is very, very high leverage with very, very high certainty. So ask that in your own life. Where can you create the highest certainty? It might be with your greatest talents and abilities, where you can solve the biggest problems, where you can be of the greatest service, where you can reach the most people. That's why a lot of people love to get in the software game, right? Because it's highly scalable. And a lot of people then start to utilize it. Or we look at cell phones. People pay for that every single month. It's something they almost never want to do without. So it's highly sticky. So there's a lot of leverage in those types of recurring revenue type of contracts. And the banks are in the business of recurring revenue. So what is it that you know? What is it that you understand? What is it that you can leverage based upon who you are? Like when I write books, there's leverage. When I create this video, there's leverage because it's not just doing it once for one person. It continues to live on even after I'm asleep, even after I'm on vacation, even after I'm not posting anymore. Think leverage with certainty and minimizing risk. When you can do that, you can start to think more like a bank. Number two, where can you add value and simplicity to something in extraordinarily high demand? They knew money's in high demand. People want to buy cars. They want a home. They want to go to school. They want to borrow for all sorts of things, even for jewelry, you name it. We have an insatiable appetite as Americans especially, but throughout the world because of this consumeristic condition that more equals better and the status and all that type of thing. So they realize, like, look, people want to spend money they don't even have. They got in the credit card business, all those types of things. So there's such a high demand there. When we're just doing something and we don't understand the demand, and when it's overly complicated, those are two destructive factors that decimate our ability to earn money. But if you can have an elegant and simple idea that really translates to helping people, it's all a bank really is saying, hey, if we gather everybody's money, then it's easy to get a larger sum to the most worthy borrowers, and we'll just pay them a small interest rate, and we'll help manage that risk. Great. People thought that was a good idea. You see it because pretty much banking is synonymous with money at this point. So where in your life can you add value and simplicity to something in extraordinary high demand? It makes me think of this client that we had that loved to go to Disneyland, and then they decided to build a website to help people maximize that experience. And they started making money on this website by saying, here's how you go through the park most efficiently and effectively, and here's what that looks like. It was, that's added value. It was very simple, and that park's in pretty high demand. Where we look at in the world, what are people most afraid of? What are most people concerned with? If you can find ways to make artificial intelligence more accessible to someone and help them to utilize that within their business or within their life because they still want human interaction at this point in time, that might be a way to create value arbitrage where you're bringing that simplicity. I saw, there's all these people going out there and they're getting their picture and they're having AI produce so many different, versions of these where it looks like they're extra muscly or they're out in space, and it's like happens in pretty quickly. Well, you can get that for free, but some people figured out, well, people don't know how to utilize that, so let me create an elegant way to enter that and get that information and pop that out. And they were making millions of dollars by absolutely making it more simple with something that was already in high demand, so value arbitrage. Third, where can you create additional revenue streams and services to existing customers? This is what banks think about all the time. They've got home loans and construction loans, car loans, signature loans, business loans, credit cards. There's even investment services. There's special accounts and services you can get so you get more attention or priority. They're hosting seminars. Think of all those different things that the bank's doing. So ask that in your own life. Where can you create additional revenue streams and services to existing customers? Whether you have a side hustle and you're helping people out when you have a full-time job on the side, or whether you're a business owner, by asking this question, we find ways to deepen the value that we currently create or strategically partner with other people that can provide those services. I just bought tickets to an NBA game tonight, and at the end of it, they asked me like 4 different times, would you like to be signed up for free for 3 months with Sirius Radio? Would you like to have Home Chef or whatever it was, at $160 off? So there's like 4 different questions. They're just looking for ways when there's already a customer. And we see this all the time with institutions. So these are 3 questions for you to really focus on, right? The first question is, how can you leverage with high certainty and risk management? Second question, where can you add value and simplicity to something that's already in high demand? And number 3, where can you create additional revenue streams or services to existing customers or strategically partner with someone to do the same? If you want to think more like a bank, it's really about that cash flow. It's about abolishing this antiquated system of retirement where you just set money aside and forget it and have the bank makes money on you. If you like this video, there's plenty more where this came from because this is one of the hot topics out there. How do loans work? Where do I, should I borrow or should I pay cash? How do I finance a car? What if I'm buying a home? I've got a library that can support you with that. So click the next link, follow it, and we'll continue to help you out.